Hello everyone, today we discuss the capital gain exempted under section 54 of Income Tax Act 1961. So first is capital gain on transfer of long-term residential house property, section 54. Subject to certain restrictions, capital gains from the sale of a residential property utilized for residential purpose are excluded under section 54 of the Income Tax Act. In order to eligible for this exemption, first is either a person or a Hindu undivided family. HUF must be the assessee. Second is it was appropriate to hold the residential property for longer than 3 months. The acquisition of a new property must occur either 1 year before or 2 year after the sale of the previous property. As an alternative, a new home may build within 3 years of selling the previous property. And second exemption under section 54B, capital gain on transfer of self cultivated agricultural land in urban areas. In order to be eligible for this exemption, in non rural regions, if the property was utilized for agricultural purposes for the 2 year prior to the transfer, individuals or HUF may be eligible for capital gains exemption under section 54B. The seller must buy another piece of agricultural property within 2 years and not sell it for 3 years in order to be eligible for section 54B exemption. Third exemption is under section 54D, capital gains on compulsory acquisition of land and buildings. Exemptions from capital gain under section 54D for compulsory purchases of land or structures constituting an industrial undertakings. In order to be eligible for this exemption, individuals of any category are eligible for the exemption under section 54D in the event that land or buildings necessary for an industrial project are acquired via force. Under section 54D, both long-term capital assets and short-term capital assets are included. Fourth exemption is capital gain on transfer of long-term capital asset being land or building or both, section 54EC. When reinvested in approved long-term assets, proceeds from the sale of a long-term capital asset may be excluded from taxes. To qualify for this exemption from capital gains, one must meet the following criteria. First is within 6 months of the original asset sales, individuals are required to invest the profits in designed assets. Reinvesting capital profits should stay within the original investment sum. The exemption only covers the amount invested if just a part of the profit are reinvested. Fifth exemption is under section 54EE. Any long-term capital gain if amount long-term capital gain is invested in the long-term specified asset. First is eligible assessee, all assessee, individual, HUF, firm, company, etc. Conditions is the capital asset transferred must be a long-term capital asset. There must be long-term capital gain on such transfer. Such investment has to be made at any time within 6 months from the date of transfer of original long-term capital asset. The long-term specified asset is not transferred by the assessee at any time within a period of 3 years from the date of its acquisition. Sixth exemption is transfer of any long-term capital asset and investment made in the purchase or construction of a residential house, section 54F. The exemption is available to the assessee who may be a person or HUF. The new residential property must be built or acquired within 3 years of the capital asset sale date, or it needs to be about 1 year before or 2 years after the asset sale. Seventh exemption is under section 54G, capital gain on shifting of industrial undertakings from urban areas to non-urban areas. The transfer of assets including land and buildings, equipments and machinery and any right in land buildings used for industrial venture in an urban area excluded from this rule. Conditions to be availed of its exemptions are there are two types of transferred capital assets, either short term and long term. Acquisition of land, buildings, or equipments must be made within a year before 2 or 3 years after the transfer of assets. Eighth is exemption of capital gain or transfer of assets in case of shifting of industrial undertakings from an urban area to any special economic zone under section 54 GA. This exemption is expected to help the industrial undertaking which may shift their premises from an urban area to special economic zone. Section 54 GA allows all types of people to seek exemption. Under section 54 GA, capital gain both long short term are excluded. Ninth and last exemption is exemption of long-term capital gain on transfer of residential property if net consideration is invested in the equity shares of an eligible company and is share of eligible assets startups. Section 54 GB, in which exemptions are included. A residential property such as a home or piece of land must be transferred to realize the capital land. The capital gain must apply to an individual or HUF. Thank you everyone.